Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain detail about how a partner's share is supposed to be paid off in case of death of a partner. So when we discuss about death of partner, it is very similar to retirement of the partner. The only difference is that instead of the retirement part where the partner itself takes the amount and goes out, here the amount is paid to the executor. Now how to deal with this is something that we have to understand. So what we need to do is that we'll be preparing a small illustration for you, and that illustration will guide you how to make the journal entries when it comes to finalization of the amount and payment of all these amounts to the executor of the partner. So let's go ahead and figure that out with certain references on it. So when we talk about retirement of a partner, this amount is taken by the partner itself. However, when it comes to death of a partner, it is taken by the executor. Now, only because of this, there are certain entries that will be changed. We have already understood the concept of separate life policy, joint life policy, what are the journal entries that are supposed to be passed. Now, when it comes to payment or the finalized amount that has been done for the deceased partner, and now you have the time to pay it up, how it is supposed to be done is what we'll be understanding. So we'll prepare a small illustration for you. Let's go through that illustration and understand how to solve that problem. So the illustration that has been prepared here shows the balance sheet of S, P and C, three partners here. Now the liability side shows certain items and the asset side shows certain items. Trade payables has been mentioned as 20,000. General reserves has been mentioned as 5,000. Capital for S, P and C has been mentioned as 25,000 for S, 15,000 for P and 15,000 for C. The total comes to around this amount will be mentioned here, 55,000. So the liability side total is 80,000 that has been mentioned here. Now let's go on to the asset side, which starts with fixed asset. It is 40,000. Debtors has been also mentioned here, which is for 10,000. Bills receivable has also been mentioned here for 4,000 here. Inventories has been mentioned at 16,000. Cash at bank at 10,000 has been also mentioned in this specific scenario. Now, to understand all these details, there are certain adjustments that we have to deal with. So let's go ahead and mention down those adjustments, post which we'll be going ahead with the practical illustration, or rather practically solving this specific illustration with those journal entries. Now, the certain adjustments that were mentioned here have been put down here or jotted down here on this sheet. Let's go through them one by one. The profit sharing ratio between S, P and C was 5:3:2. That has been mentioned down here. On 1st of May 2009, P died and it was agreed there are certain adjustments that are supposed to be taken into consideration. First of which was goodwill was supposed to be valued at 3 years purchase on the average profit of 4 years, which has been mentioned down here. The average profit has to be taken into consideration for all these years, and we have to go down. That means 2000, the average profit was 10,000. 2008, it was 13,000. 2009 it was 12,000 and 2010 it was 15,000. So as you can see that this specific trend doesn't show an increasing trend or a decreasing trend, hence we'll use the similar average profit. That means a simple average profit we'll be using. We won't be using a weighted average profit here. If at all in the question it was not mentioned that it is a weighted average profit that you have to calculate on. However, if you can see a trend, then you have to use weighted average profit here. But in this question, as the trend doesn't show anything, we'll be using a simple calculation, that is simple average profit. Further evaluations also mentioned that fixed asset was supposed to be depreciated by 10%, and they also found a bill of rupees 1,000 which was worthless, and this was not going to affect the goodwill of the firm. Now, out of this, a sum of rupees 7750 was to be paid immediately, and the balance was supposed to be kept as a loan with the firm at the rate of 9% interest to be provided to the deceased partner. So this is what they are supposed to be taken into consideration. We have to pass journal entries according to this. So if you know it is a death of the partner, this is one illustration which includes everything. So it will be calculation of goodwill, revaluation accounts have to be prepared, rather the journal entries will be fine with here, and then the deceased partner execution has to be done. Also, after this thing, S&C shared profit in the ratio of 3:2. Now we'll be passing the journal entries for this and we'll be marking the closure of this sum. So let's go ahead and prepare the same here. So the first entry that we have passed here is the general reserve that was there in the balance sheet has to be shared first to the existing partners, rather including the death partner as well. So that has been done. 5,000 has been shared in the old profit sharing ratio, that is 5:3:2. Now the second entry that we have passed here is the calculation of goodwill for the capital partner which has been dead, that means P, which gives you a total of 11,250. That means all the 4-year average profit divided by 4 multiplied by 3 will give you a certain amount, and the P's partner ratio, if applied to this, will give you a profit sharing ratio, or rather the goodwill calculation for this will be 11,250. This has to be shared by the partners S and C in the ratio of the sacrificing part. So let's go ahead and calculate the amount here. The next entry is the revaluation account entry that we are supposed to pass. Fixed asset has been going down and bills receivable has also gone down because that was supposed to be taken off or written off. So bills receivable as an asset that goes down for 1,000 rupees goes down. So total of 5,000 is on the revaluation account debit side. Now this whole 5,000 on the revaluation debit side is a complete loss because there is no liability that is getting changed. So this will be shared by the existing partners in the profit sharing ratio here. So this is the journal entry that has to be passed for the same. Now let's go on to the next journal entry. Now as the calculation is done only for 31st of December, from 1st of Jan 2011 until 30th of April 2011, these 4 months profit is to be debited to profit and loss suspense account and has to be credited to partners who has been dead, that means P's capital account, which amounts to 1,500 as per the goodwill calculation or as per the profit sharing ratio. Now the amount that is payable to the executor is supposed to be mentioned. That means P's capital account will be debited to the executor's account, which is for 27,750, and the last entry will be payment to the executor, that will be mentioned as executor account debit to bank account. The amount that will be mentioned here is only 7,750, as it was mentioned in the question that only this much amount is supposed to be paid. Rest amount is taken, that means out of 27,750, 7,750 is paid to the executor and the balance 20,000 is kept as a loan with the company. So this is how you deal with these kind of problems. And understand, whenever a death of a partner is supposed to be considered, all the steps that we followed in retirement of the policy is supposed to be adhered to, and that has to be followed. Additionally, few more entries are supposed to be passed based on the adjustments that are given in the question. So I hope this video gave you a clarity about how to solve basic problems on death of a partner. In the next video, we'll be understanding how to solve advanced problems related to the same kind of situation, and then we'll be marking the closure of this specific chapter, which is partnership accounts. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.